All right. Hello, everybody. TGIF. It's always the best day of the week, isn't it? So I'm here for another day to keep you up to date as best as I can before Kayman and Ryan return on Monday. So let's start. It's going to be another brief session, okay? So don't expect the 1 hour fantastic quality stuff that Ryan and Kay bring. So let's start with the overnight news on the Ukraine-Russia front. Uh, the news outlets are reporting, and that's what we know. That's what we get here, right? I don't know what the exact situation is, but the outlets are reporting that Ukraine have taken uh, chunks of Russian territory, and they're also accumulating Russian soldiers who are surrendering. So, if that's the case, and this is a turnaround that I certainly didn't expect. And we had some comments from the Kremlin, from one of the aides, and Patrushev said yesterday that this attack was planned with the participation of NATO and the Western Special Services. So they are uh, throwing these towards the West. Is it true or not? I have no idea, but this is what they're saying. And that the US statements that it was not involved in the attack on Kursk are not true. That's what he said. So things are certainly seeming to be escalating there. And geopolitically, nothing really more to say from yesterday. We can have a look at the markets, and we had a few movements, a few data points. So starting with yesterday's data, we had um, a chunk of decent data from the US and some not so decent. So we had the retail sales, which beat expectations. Remember, this is a number that is not inflation adjusted. So it is basically, it includes inflation. So, if you see a positive number, it means that the money that's spent is more than it was before. Well, if we have inflation, it's going to be, people buying the same amount of stuff is going to be more anyway. So it was better than expected. We had jobless claims slightly better than expected, revision slightly worse, so not a huge deal there. Empire State again negative, and we talked about and Philly Fed manufacturing. We talked about um, these prolonged negative numbers in New York Empire State. The only other times we've seen them really was, well, COVID was a blip, was really the crisis in 2008. So this should be concerning. Also, the breakdown in Philly Fed is interesting because you had employment minus 5.7 from 15.2, new orders down as well, prices paid up. So this is really not what you want to be seeing, but just more data points that are pointing to very, very mixed data in the US, and the Fed is definitely looking at the employment aspect because let's face it, inflation is slowly creeping towards that 2% target, but unemployment is starting to rise, and this is definitely worrying. Um, we had well, let's have a look what we have today first, and then we can have a look at a few markets. So some data out of New Zealand, better than expected PPI. UK, well, after yesterday's positive GDP number, we had retail sales, which wasn't a positive number, but it was slightly worse than expected. But overall, some pretty encouraging data from the UK, and we're going to look at the pound in a bit, which is doing better today. Um, what else do we have today? We have building paper, so housing data from the US. And we also get Michigan consumer sentiment and the inflation expectations, which are always very interesting. Um, so markets, we had rally yesterday, risk on. Stocks in Asia overnight rallied to basically follow what the U.S. markets did yesterday, and the thing is now how quickly and how what timing is the rate cuts for the Fed. And we had Federal Reserve Bank of St. Louis President Alberto Musalem, however you say that, he said that time is approaching for when it's going to be appropriate for the Fed to reduce interest rates. So a September cut is pretty much done now, unless there is some kind of extraordinary uptick in inflation or a downtick in unemployment, which I doubt we're going to see. So the Fed's going to be cutting in September. The question is it going to be 25 or 50? I still think it's going to be 25 unless we get some kind of really strong deterioration of the data. So let's have a look at a few markets. I'm going to attempt to look at a little bit of a shorter time frame because we do have things happening. My main view, first of all, I've been saying this for a while. I think yields are going to resolve the downside. They have, and I think we probably have one more push towards 330, which really is for me, the target. After that, all bets are off. But I thought this move here was, I don't want to call it the easy money, but it was something that I felt very strongly about, and it's been manifesting. So let's go down to a 1 hour. 1 hour or 4 hour? Let's go to 1 hour and let's have a look at euro pound. Let's look at the pound first, because it's been strengthening on the back of good data. And the euro pound for a while I've been saying that this was bearish. I'm going to switch back to daily just to show bearish below 85. And now we're 85, 2018, whatever it is. So we're getting close to this area here, which is pretty critical. So if you're a euro pound bull, I think this is not a bad place. Maybe 10, 15 pips below, not a bad place to attempt longs. But again, you have to know where your stop is. So below the zone, I think that this will have made this a false breakout, and will probably resume lower. So this is entering a very interesting level. Cable is also at the 61.8 from the highs, the July highs to the August lows. So this again went out to the pip pretty much. So not a bad place if you are bearish the pound for whatever reason, to attempt a little reversal. I like that. 61.8 is my favorite fib. Not a bad place to take a short if you are so inclined. Euro Norway. We talked about Norway yesterday and how they kept rates unchanged, and Norges Bank said that they're going to be keeping them there for a while until inflation goes out to target. Well, if you zoom out a little bit, you'll see that we're getting now to a very, very important level, 1170 to call it. So we're close. I like this to the downside, but I need to see a break below first. Once we get to something like 1171, I think the coast is clear to take a shot, and then obviously stop above just in case it proves to be a false breakdown. Dollar Mex is another one which I like. There's a lot of currencies which are getting to important levels and they have to make decisions. 1840 to 1870, I'd been saying this is a very important area. I had been very bearish. Well, I've been bearish below this level for a while because this has a really nice positive carry to be short. If this breaks again, then this will have been a 2-week false breakout. The spike was with the risk off selling. And let me have a look at that. Yes. You can hear me, right? Somebody says they can't hear me. And somebody just typed that you can hear me. Otherwise, I've been talking for 9 minutes. Okay, thank you, Gavin. I've been talking for 9 minutes for no reason. Okay, so Dolomex, another one which is in big decision time. This breaks lower. I'm going to get short again. Again, nice positive carry. Dollar yen. Remember what I said yesterday? I was looking at this big trend line. And I said we were somewhere around 148, 1 or something like that. I said if we get to 149, I really like this as a short. Well, we got there. Look, I probably haven't drawn my line correctly, but 149.15 we got. I think this is a nice short with a stop above. I hope I was actually asleep when that happened, so I didn't catch it. But it's I like this. I like this on short touch side with a very with a tight stop above because we know what the yen is like. It's the widow maker. Um, the Dixie, I've said for a while, I think this resolves to the downside. But first we have to take out these lows, 102.15 or so, very, very big support. It must hold for bulls. Not a bad place to take a counter trend long if you like, but I'm not getting long the dollar. I will outright on the Dixie, I mean. I will chase this lower if we break below. But then again, I have other positions which are effectively dollar negative. So if this breaks down, they're going to be doing well. Um, our friend Bubble Boy looked at Euro Swiss on the chat room. Come on, EURCHF. And that's interesting. Check this out. Thank you for that. This is breaking down. So another nice little technical one. This has had so many touches, right? So this is a nice trend line which broke. And we also have the 200 uh, hourly moving average, which we are below. We're kind of retesting it. So this is a nice little breakdown. Um, very, very tight stop. I think I might short this. Um, if I do, it's going to be very tight stop above. But thank you for that, for showing us that on the chat room. It just shows you we have the chat room and we have so many people who are just looking at stuff all the time. And people who I know we do have some traders who look at only specific instruments. They don't look at everything. So when you have people who are focusing on something like the Euro Swiss, they are going to be on it, right? So thank you for that, for pointing it out, and just goes to show that we learn something every day in the chat room. I certainly do, and we have people who help us out, and we help them out all the time. Um, what else do we have a look at? Let's have a look at equities and everybody's favorite stock at the moment. Nvidia is rising again. It's interesting because we almost touched the 50% fib at 90. Where did we get to? Very close anyway. Um, and this, stocks are still looking very strong now, and I've said it. I've said it yesterday on the flow show. I've been saying it. I think yields and the dollar are going down, and that means that unless there is some kind of huge event, stocks go up. And we have to remember, 5,500 had been a very important level for the S&P, and we're right back above it. And I mean, look at this V-shaped rally. We had this 2, 3 day panic, which if you move back enough in time, it's not even a blip, and now we're right back. So what do I do here? Gun to my head, I'll buy. It's I know valuations are high and everything, but I will, if I had to, I'll buy stocks here. I know it sounds crazy. Um, Metals did really well yesterday. Gold less so, but silver and platinum did really well. Gold is still in this channel, threatening new all-time highs. We could get them today. It's only $20 away, but it's looking supreme. And let's face it, with the rate cuts coming, why would the gold drop? Only if there is some kind of bank failures again and big black swan event. Then all bets are off and everything gets sold. Silver performed very well yesterday. Very nice green candle back within this channel, which I know I haven't drawn it very well. Um, Platinum the same, threatening to break out from the bigger channel. What I do want to show is gold miners, and that is something that has underperformed. Miners have underperformed in a big way over the past few years, mainly because they are leveraged, right? And they have debt, and as interest rates go up and debt cost goes up, they can't invest more. They have a larger debt service load, so they don't do well. But look at this. Let me overlay the gold. And if you go back a few years, it's been a pretty good correlation, right? I mean, this is the not the junior miners. This GDX is the big miners. Very good correlation, and then suddenly gold starts outperforming, and GDX starts going sideways. And what happened here during those 2 years? Well, we had rising rates. So I think this is something I am long GDX. This is something that I really like, and I'm thinking about adding more now that we've broken above this trend line. And this trend line is pretty important on a weekly chart, and we're gone. So where are we? 37.29. Okay, pre-market. So we've broken out. I like this. I really like this a lot. Um, what else can I say? Let me see if we have any questions. Yes, exactly, Gavin. Correlation broke down when rates went up. Um, okay, so Aussie, haven't traded this in a while, but on a daily, which is what I look at, I guess I mean, we're caught between these two DMAs. Oh man, I really don't want, this is just no man's land for me. On the hourly, okay, in the hourly, on the short time frame, if you're looking for a quick trade, this is not a bad short here, right? Because you know where you're wrong above 66.42, but you can bet that there are going to be some stops above here. So this is the classic stop hunt. We're so close, only a few pips away. This could get taken out. So, you can try that, but you could get taken out pretty quickly. I would probably prefer to be getting long this on a breakout. So thank you for asking that. This is an interesting one, and it is definitely at a very nice technical level. The the guppy the guppy has been doing well. Let me have a look at the bigger picture first. Yeah, 200 DMA. Sorry, yeah, 200 DMA. Yes. Well, that you might want to go against. Especially if the dollar yen continues to the downside, then there's a high chance that this will do as well. What do we have on the hourly? Yeah, I don't know. I'm not convinced either way. I don't know what to do with this. I am bearish dollar yen, so that would probably make me bearish guppy. So, but I wouldn't try. I don't know. It doesn't tell me anything. Sorry. Um, Yeah, but GB, Sterling has a way of popping up, and it's been strong, right? It's been strong over the past few days. So, um, oops. No, I don't want to do that. There we go. Anyway, I don't have anything else to say. I will leave it at that and wish you all a very good weekend. Get some rest and back with Ryan and Cayman, I think, on Monday, and I'll see you in the chat room. Thanks, everybody. Take care.